Hi everyone, this is Chris from TPLI, Turning Point Life Investment, and this is going to be a type of Apple weekend video for this July 4th weekend. First, I wanted to talk about how previously last week I had mentioned or said, whatever you want to say, that Apple was in like a head and shoulders pattern. And it actually broke under it, and we were very bearish on Apple. But it looks like it came up above the head and shoulders pattern, and it is going to move up. It moved up higher. So the head and shoulders pattern is now void. Now, one thing I do want to point out is I can draw a nice bearish channel right here. And once this Apple really got out of the head and shoulders pattern, I was expecting it to move up and hit the top of the channel, which it did today. So I want to see what's going to happen, if there's going to be more bullish follow through for Apple, if it gets above today's high or even above more of the falling trend line, then there's more bullishness to come for Apple. But that's the way I'm just going to look at it right now. Next is the Nasdaq Composite. This has just been amazing too, especially today. It was in this type of triangle. You see this support line right here and then this falling resistance line, and it actually broke above it very well. So, with a lot of days like this, I'm really going to say that the Nasdaq is pretty much due for a pullback. Even the daily stochastics is showing overbought. So some type of a pullback or sideways movement. I wouldn't even be surprised to see a move down and retest of this falling resistance line, which is now support, or maybe one of the daily EMAs. And if the Nasdaq continues to move up higher next week on Tuesday, it's close to resistance, which is around, ballparking it around 2,835, which is not too far away. So if it does continue up, it's going to bump its head against resistance and then maybe move back down. But right now I do feel that it's a bit late to be jumping in from the long side, but then again, we've seen the market continue up higher and higher and higher. But I really wouldn't recommend chasing this bullish run right now. I would recommend maybe if it pulls back a bit or even moves up a bit in side trends under this level of resistance and then breaks up, then yeah, you can be bullish. Next tech stock I want to take a look at is Google. Google it was amazing today. There was this support at 513, which was tested multiple times. It moved down and then actually moved up to retest this broken line as resistance, and it broke above it. So right now it's hitting its 50-day exponential moving average, and right here back around April 1st, April Fool's Day, it actually retested the 50-day exponential moving average as resistance before falling back down. So I want to see what's going to happen around this 50-day exponential moving average, if the same story is going to happen. Amazon, what an amazing day too. It was just a great day in the markets, especially on the long side. So it broke out to new highs again, and it broke above resistance. So, I'm not really gonna say either to chase Amazon. It does look a bit overbought. Even daily stochastics are showing overbought. It could make another run, a $10 run or something like that. But I'd rather just see this pull back or chop around a bit before I want to enter on the long side. Dell was another stock that I took a look at. It actually earlier, like around 2 or 3 days ago, broke above this resistance level, which is around $16.15. So I was expecting Dell to move up and retest this resistance at 17, or around 16.95 or so if you want to be really specific. And Dell actually got there today, but it actually closed above that level. So it does look bullish for Dell, but once again, I feel like it's a little bit too late to be hopping in on the long side. Wait for some type of a pullback or sideways movement. It'd be really nice if Dell just chops around in this range right here and then breaks out to new highs. That's what I'm looking for, especially on a buy. A stock that we talked about on yesterday's webinar was DHR. Now I really like DHR, especially on a. I wanted to move above yesterday's high. It was a nice entry. So it was a move above yesterday's high was the entry, and we're going to go in for a quick target around 55, and it actually was triggered this morning, and my target was hit this morning, so there's no reason really for me to be in the trade anymore. But if anybody missed the breakout, I wouldn't be trying to chase it right now. The other stock that we had talked about in the webinar was BDX. I really like this because it was in a type of squeeze, and nice volatility squeeze, and just really wanted to get above this level of consolidation range, and it just nothing really surprised me with the market now, but it just really moved up and broke out of that range, and my target was this previous resistance around $89.30, somewhere around there, and it really just hit that target today. So I can't do anything more. I'm just out of the trade. Another stock I mentioned in the webinar yesterday was CVH. I really wanted it to see it consolidate more before breaking out to a new high. I'm a bit, it is a good bullish looking stock, and it did get above resistance today, but I really didn't take it because it's not too attractive. I wanted some more days from consolidation first, or pull back or something like that. But if anyone took it, then just be very conservative in the shares that you took, but also the first sign of trouble, get out.